So a lot of economic indicators have come out in the last few weeks, and the news from them is surprisingly good. And while it's good to see improvement on things such as job growth and inflation, consumers are actually still pretty unoptimistic about the economy due to things like the trade war and the tariff uncertainty. But we will discuss that more when we get to it, but first we have to talk about the article. Annual inflation rate hit 2.3% in April, less than expected and the lowest since 2021. And that's good to see. Inflation has been way too high for way too long, and also it's been surprisingly stubborn in that despite the Fed's best efforts, it's not really been going down particularly well. But it does look like, as of recently, it's finally on a downward track. The details are here. The Consumer Price Index, which measures the cost of a broad range of goods and services, rose a seasonally adjusted 0.2% for the month, putting the 12-month inflation rate at 2.3%, its lowest reading since February of 2021, the Bureau of Labor Statistics said. The monthly reading was in line with the Dow Jones' consensus estimate, while the 12-month was a bit below the forecast for 2.4%. Excluding volatile food and energy prices, the core CPI also increased 0.2% for the month, while the year-over-year level was 2.8%. The forecast for 0.3% and 2.8% respectively. And here we can see the graph. This was kind of peak inflation in recent memory, at least in the past 50 or 40 years. It basically hit 9% in 2022, but since then, it did a really good job of coming down until it stopped at around September of this year, where it continued to creep back up, despite the fact that the Fed was not changing anything. It was just the way the economy was running at the time. But around January, it hit its peak and has been coming down ever since. And that's really good to see. We're now low, not quite as low as we were pre-pandemic, but we're certainly on our way there. Now, a lot of you are probably asking, well, didn't we think that the new tariffs were going to increase prices? And yes, we did think that. And probably they actually still are going to do it. This article talks a little more about that. Good news on inflation, and we need it, given inflation shocks from tariffs are on their way, said Robert Frick, a corporate economist at Navy Federal Credit Union. Non-tariffed goods are still in the pipeline, and perhaps some importers have absorbed their tariff costs for now. So in anticipation of tariffs, companies started buying way more stuff than they normally would. So instead of buying enough merchandise to last them the next 2 to 6 months, maybe they were buying enough merchandise, and this is just kind of a random number, to last them the next few years. So they were spending way more money than they would so that they could keep their prices lower as tariffs hit and their competitors were forced to raise their prices. That guaranteed them more money. And this whole situation is a bit unfortunate because really good and solid progress on inflation, thanks to the economy recovering quite well, might actually just go away because these tariffs are going to make things more expensive for everyone. But for now, the news is good, and I think maybe for once we can just be happy that we have some good news. Now, I said several indicators came out, and the second one I want to talk about is the jobs report. U.S. payroll growth totals 177,000 in April, defying expectations, meaning it was higher than expectations had thought that there would be. And it's pretty rare to get a good jobs number and a good inflation number at the same time. It's great that we're getting them both, and we need to acknowledge that this is surprisingly good news. The article talks about it here. Job growth was stronger than expected in April, despite worries over the impact of President Donald Trump's blanket tariffs against U.S. trading partners. Nonfarm payroll increased a seasonally adjusted 177,000 for the month, slightly below the downwardly revised 185,000 in March, but well above the Dow Jones' estimate for 133,000, the Bureau of Labor Statistics reported on Friday. So even though companies are worried about inflation, as far as things right now are concerned, people are buying enough stuff to justify companies continuing to hire people in order to fulfill the demand for all the stuff that people are purchasing. And that's very good news. But wait, there's more. The news gets even better. We can read on here. The unemployment rate held at 4.2% as expected, indicating that the labor market is holding relatively stable. The survey of households, which used to calculate the jobless rate, showed an even stronger gain, with an increase of 436,000 in those who reported holding jobs in the month. A broader unemployment gauge that includes discouraged workers and those holding part-time jobs for economic reasons, or the underemployed, edged lower to 7.8%. The labor force participation rate ticked higher to 62.6%. So what we're seeing here is the amount of people who are looking for jobs is actually increasing, and the amount of people who are looking for jobs and can't find jobs has stayed the same, but the amount of total people in the workforce, that's the labor participation rate, has actually gone up. So more people who want jobs are actually able to find jobs, and more people overall are working, and that's really good news. And I want to pause here really quick and say that bad news gets way more attention, but it's really important to focus on good things when good things are happening. But when it comes to videos like this, people are far less interested in watching a video about good news than they are about watching a video about bad news. So if you are enjoying this video and appreciate that sometimes it's good to report on good news, I would love a like on the video and a subscription to the channel if you are able to. I'm trying to put out between 1 and 2 videos per week. The next economic indicator that I want to talk about that we saw really good growth in is wage growth. On the wage side, the average hourly earnings rose just 0.2% for the month, below the 0.3 forecast, while the annual rate of 3.8% was also 0.1 percentage points less than expected and the lowest since July of 2024. And I realize we're seeing words here like below expectations and less than what was predicted, but when wage growth is less than predicted, it's okay because inflation is also less than predicted. And if you do the math on it, you've got 3.8% wage growth and 2.3% inflation growth, then real wages have increased by 1.5%. And maybe that's not a lot. Sure, if you're making $100,000, you're only making $101,500, but it's also way better than it's been in the past. If we look here at the US wage growth, we can look back at the same time that we were looking at earlier, and we're seeing that it was growing at about 6% during the height of inflation when inflation was 9%. So what you were doing was with 9% inflation, 6% growth, you were losing 3% per year. So even though the rate at which the wages are growing has decreased, the rate at which inflation is growing has decreased as well. And that is actually on a different page here. But what that means is that the amount of actual dollars left in your pocket after you purchase everything has gone up by an average of 1.5%. This is a term called real wages, and generally over the past few years, it has finally been increasing again. And as with all good economic indicators, when you see good things coming out about the economy, then we can see that the S&P 500 generally responds accordingly. And you can see that here, since the low, we're up about 17%, and if we look over the past year, we're up about 10%. And 10% in a year is actually pretty good. It's a good idea to bet on the economy growing at roughly 8 to 10% per year. So to be on the high end of that 8 to 10%, despite all these ups and downs and all the crazy swings back and forth from the news here and the tariffs there and the trade wars over there and so on and so forth, it's good to see that we are still averaging at 10%. And if we look where we are down from the absolute peak of the stock market recently, we're only down about 3%, which is a lot in terms of, the amount of total money, that's trillions and trillions of dollars. But if we look over like the last couple days, we're up about 1%. So reasonably in the next few months, we could surpass the highs that we saw back in February. Now we see all these indicators with things like strong job growth, positive wage growth, cooling inflation. So why is it that consumer sentiment and the consumers themselves remain really pessimistic about the economy? Consumer sentiment slides to second lowest on record as inflation expectations jump after the tariffs. U.S. consumers are becoming increasingly worried that tariffs will lead to higher inflation, according to a University of Michigan survey released on Friday. The index of consumer sentiment dropped to 50.8%, down from 52.2% in April, where it was already really quite low, in the preliminary reading for May. This is the second lowest reading on record, below June of 2022, which was the absolute peak of inflation where it was like 9%. The outlook for prices changed also, moved in the wrong direction. Year-ahead inflation expectations rose to 7.3%, up from 6.5% last month, while long-term inflation expectations ticked up to 4.6% from 4.4%. And despite all the good things that we're seeing, at its core, this right here is a problem. The initial worry that people had about what was going to happen to the economy has not been solved. In the long term, no matter how good wage growth is, how low unemployment gets, how cool inflation gets, if there's still tariff uncertainty and price uncertainty, that's going to lead to people being pessimistic about what the future holds, even if things right now are improving considerably over what they have been in the last couple of years. And as for if their worries are valid, the answer is very probably, unless something changes with the tariffs, which is very possible because things change pretty often with the tariffs. Every month or every 60 days, we tend to see either another tariff being added or some other tariff being pulled back. But realistically, if prices do change because of the tariffs, it's not going to happen all at once, how you might think. Probably likely over the next 6 to 12 months, we're going to see a slow increase in the prices as places like Walmart and Amazon and Kroger and Aldi and so on, who import stuff to sell, are forced to increase their prices to offset their margin loss. Now, I want to go in a slightly different direction here, and I want to get ahead of people saying that this is Joe Biden's economy versus people saying that it's Trump's economy, because realistically, both of these people are wrong. The president rarely has direct impact on the economy like this, and certainly not in such a short time frame as we're seeing here. Trump has only really been doing things in office office for about 4 months. Regardless of that, people on both sides of the aisle are going to claim this is a victory for their party. The Democrats will say that Joe Biden set up the economy so wonderfully that we're reaping the benefits now, even though we had some of the highest inflations in recent memory under Joe Biden. Whereas people on the right are going to say, look, Donald Trump came in and it only took him 4 months to fix this terrible economy that Joe Biden left us, even though realistically in such a short amount of time, Donald Trump's policies won't have actually had any impact on the economy yet. The reasons that inflation has cooled down are not really Biden's or Trump's fault. Biden tried to reduce inflation by bringing local manufacturing back to stimulate more jobs, et cetera, et cetera. That was under the CHIPS Act. But the CHIPS Act was dismantled by Donald Trump when he got into office. The housing market is cooling, but that's not the effect of either president. No president has suddenly made a bunch of houses appear or made demand for houses just vanish. There's no executive order that could have done that. Energy cost is another big thing that's helping inflation cool down, but the president does not control OPEC. The amount of production coming out of OPEC is basically beyond our control. And that's why there's an inflation measurement that disregards that, because oil prices can go up and down just kind of randomly throughout the year. And there's not really anything the US president can do about that. Federal monetary policy is another great example of a thing that a president does not impact, but that has a direct impact on inflation and trying to keep it cool. These are all things that have happened to change inflation to make it get better. And neither president had anything to do with any of them. And specifically, I want to call out something Trump said recently. This was tweeted out on April 30th, just after the stock market had a huge hit, wiping off trillions and trillions of dollars in market value. He said this is Biden's stock market, not Trump's. I didn't take over until January 20th. Tariffs will soon be kicking in, and companies are starting to move into the US in record numbers. Our country will boom, but we will have to get rid of this Biden quote-unquote overhang. This will take time and has nothing to do with tariffs, only that he left us with bad numbers. But when the boom begins, it will be like no other. Be patient. Except now, under this supposed Biden economy and stock market, we've seen stocks recover almost to where they were before, jumping almost 20% over the last few weeks. And presumably, with all of these good economic indicators, Trump will currently, or maybe by the time this video goes up, has already claimed credit for that. But that means that when the tariffs hit, he'll be forced to take responsibility for the fact that if we are in his economy right now with the good numbers, then we are still in his economy when the bad numbers come along. And trust me, unless something changes, there will be bad numbers coming along. Thanks for watching.